Oh, yeah, that's right. Keep the dividend, the one thing that most of the shareholders of AT&T wanted. Now, if you read the fine print, you'll find that the dividend has been cut in half. Oh, of course they didn't say that. That'd be too brutal. They didn't say that at all. They said, quote, after the close and subject to AT&T board approval, AT&T expects an annual dividend payout ratio of 40 to 43% on anticipated free cash flow of $20 billion plus. Woo, that sounds good, right? I mean, maybe it's a dividend boost. If you do the math, it's a 50% dividend cut. Transformational? I got another word for it. How about disgraceful? To me, this was a tremendous destruction of value. Was there really nothing to all that direct relationship nonsense they used to justify the Time Warner acquisition? I heard a lot of talk today about how the entertainment landscape changes so fast that AT&T needed to do something to keep up, and this spinoff was it. Spare me. It's not that the entertainment business changed. It's that the deal never made sense in the first place. There's no synergy in a wireless provider owning HBO. The truth is, AT&T made a boneheaded decision, and now they're paying for it. But in corporate America, no one really pays for it. No one's even allowed to say it. No one's allowed to admit it. No one can admit, quote, this is a quote that I would have put in the press release. My predecessor made one heck of a moronic move, paying $85 billion for Time Warner just a couple of years ago, money we didn't have, claiming our wireless subscriber base would somehow augment the media business. But it turns out we're just a heavily indebted cell phone company with no important consumer relationship at all. Because that well-heeled, well-compensated bozo paid so much for no reason whatsoever, I have to dump this thing for about half of what we paid and also cut the dividend in half, even though I know the only reason my shareholders bought AT&T was a source of income, period, end quote. There, I would give them that quote. That would be good, right? I mean, that would add an advantage of being true. Now, few CEOs are that honest, but a candid admission, at least that they screwed up, would have been so much better than all the garbage I heard today. So what does this story really mean for you, the shareholder? Well, first, here's some learning lessons. In corporate America, anything goes. No one's going to stick up for you, the existing shareholder, who got suckered into owning this one because AT&T told a fantastical story about how the synergy from the deal would support their dividend. No one apologizes over the waste, even though they effectively lit billions of dollars on fire right up the chimney. No one disparages the guy who put the whole stupid deal together or even mentions the now dubious rationale. When Randall Stephenson stepped down last year, what did he get? He got a $64 million retirement package. Thanks for nothing. Here's your hat. What's your hurry? Don't let the door hit you on the way out. Then you have to wonder what really went wrong here. Well, you could say it's the bogus concept, but that's only part of it. The other part? This is what happens when you run the most heavily indebted company in America. I can tolerate this blundering by Apple or Alphabet or Facebook. They'd never do something as stupid, but at least they're sitting on mountains of cash, so they can afford to make mistakes. But AT&T already had billions upon billions in debt, including, by the way, $48.5 billion from another ill-fated acquisition that now spun off DirecTV 7 years ago. Given the state of the balance sheet, this Time Warner deal was completely ill-advised, and boy, oh boy, am I putting it politely. Second, it's a great way to learn why you should never reach for yield, because most of the time when you have a stock that is at 6.6% yield in this low interest rate environment, it means there's something very wrong. Otherwise, the stock would be higher and the yield would be lower. I say great only because if you bought AT&T within the last few months, it's highly possible you didn't get hurt learning this lesson if you dumped it today. When I said you should, when it was still up, it deservedly ended up down 2.7% to close at $31.37. I got some insight. It may not be done going down. Finally, unlike sports, there's no referees in this business. There's nobody to say, nope, you can't do this. It's against the rules. In theory, the board of directors could play that role, but I don't think AT&T's board played that role.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.